Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So just to give you a little background, I've been providing technical analysis, research, and consulting to institutional money managers for the past 32 years. And in the past few years, I've started to provide that research to individual investors. Now, what I want to do and what I do on the show is I start out with a lesson to start on technical analysis or trading, and then I go into all the stock requests that came through. So let's go ahead and get into today's agenda. And what I want to talk about today is how I use ADX to avoid noise. We want to take periods where the market is not really trending right now and avoid them. And if we can do that, it'll avoid the choppy periods where you're getting whipped around. And if anyone's been trying to trade in this environment, especially type swing trade, you see the movement and the swings are very whippy, lots of quick reversals, that kind of thing. And what I'm going to show you in today's lesson, I think will help avoid that. And then what I like to do is look at this as a 2 time frame approach. So I'm going to go through, basically in this lesson, I'm going to show you how I would go about using ADX to help with that. And then I'm going to go through all the stock requests that came through. So let's go ahead and get into this lesson now. So I've got an hourly chart of LRCX here, Lam Research. And what I wanted to do is kind of box the areas where the ADX is at 25 or lower. Okay, and I've pretty much I put this red mark across so you can see where those levels are, and then I've boxed the areas on the chart itself. And what I want to show here is how, if you can avoid these periods. So if you're trying to trend trade, okay, trend trading to me is you're looking at a stock that's moving in one direction or the other, right? It's either moving up or moving down, and you want to play pullbacks in the trend for either a single leg or try and trend trade where you get in and trail a stop and see how far it'll go. But in either case, whether you're trending to the upside or to the downside, we need to have this ADX above 25 to kind of tell us when we're avoiding the noise. We want to avoid noise. And when the moving average lines are just waving back and forth, right? There's no respect here. So this line starts to flatten out through this period. It was declining and then it flattens out. And that corresponds to where the ADX drops down below 25. In this period, it starts to flatten out, but bigger thing here is that we were respecting the 18 and then we stop respecting it right as this line is dropping down. And then we come back down through and then we come back down up, and we don't have any respect for the 18 here. We need to have respect for the 18 if we're going to trend trade. If we're going to trend trade and buy pullbacks or sell rallies, we have to have respect for this line. So what this ADX does by avoiding the periods where you're below 25, and this seems really simple, but I find a lot of guys are so anxious to get in right at the top, like something's testing this high and they really want to get in before the trend gets going. They want the best price they can get if they want to short something, or if they want to buy on the low, they want to buy at the low price, not necessarily the lowest risk. And that's kind of the phrasing that I like to use with guys is buy low risk and not low price, right? Don't worry about getting in at the absolute bottom. Wait for where the trend is telling you that you have much lower risk and then look to play pullback. So what this is actually showing us is if we avoid the boxed areas and we use this as our higher time frame, you got to think about this as a 2 time frame strategy. All right, this is basically right out of the book that my book and the course that I put together, and that is we use the higher time frame to determine which stocks to trade and which ones are trending. So through this period here, right in this area, we've got a trending phase. The 18 and the 40 both moving, and the ADX is basically telling us how to do that. So we could screen and say, give me all the stocks where the ADX is above 25, and in a lot of cases, it's going to show you this type of a pattern. Or we look at this period here, you can see right through here, you see the moving averages are trending. You see how we've got a trend in place? And when we have a trend in place with the moving averages, we can go to the lower time frame and play pullbacks in the trend. This is what we want to be looking for. So this specific pattern, when we have a rising ADX, obviously there's a little bit of details you have to know. But when we have a rising ADX, we don't necessarily look for a move all the way back to the moving average. This is a great trade because we had a rising ADX environment to the downside. So we're not necessarily looking for a move all the way back to the moving average. Now, one of the things I really wanted to point out, and you have to have this understanding of ADX because it will give false signals. It really will if you don't understand what is causing the ADX to do what it's doing. So this looks like a really powerful sell to the downside, really strong price action. But look at how that took place. Remember, the DI line, the red DI is giving you the difference between this low and this low. So this is all negative DI because we had this big gap down and we came all the way down here. But look at what happened by the end of the bar, the first hourly bar. It gaps down, but it turns around and has nothing but green. It's basically above the open for the day, finds support at a big round number at 300 and has a pretty strong rally. And then the ensuing bar has another big green bar to the upside. And I guess what I'm trying to point out is we get this big red reading, big negative DI reading on this gap down. And it's causing the ADX to look very strong to the downside. But it's creating massive lag. You have to know, I mean, I start out my course by talking about the candlesticks because you have to know what to look for, what this is telling us, why this is such an important bar and a reversal bar. And you can also see actually the MACD is giving us a little bit of a different signal. You see how there's divergence there? So we have to understand how this is calculated and why there's going to be lag when we have big moves to the downside. The same thing can hold true in a stock that's going to a climax to the upside, and you get a big spike sometimes and get a big spike reading where there's a big topping tail. The ADX is going to look really, really strong. The green DI is going to be really strong. ADX is going to be really strong. And it's giving you a false signal. It's almost giving you like a false sense of security that the trend is bullish when in fact it's really a climax. So we have to be on the lookout for this, and you have to understand how ADX is calculated to know that this is actually more bullish than bearish, even though this is showing up as a big bearish reading. So I wanted to make sure I covered that, but look at the periods where we avoid these periods where there's either consolidation going on or just no trend and no respect for the moving averages. Now, one of the things I want to point out is that if we can go long enough sideways and not have any respect for the moving averages long enough, and the ADX can stay low for a period of time, and I can draw trend lines in place, this is the closest thing we have on this chart. I specifically picked this out because I didn't really want a period of long low volatility, because those periods were actually looking for a breakout pattern to develop. So if this goes long enough and I can draw a trend line in place, when this breaks to the downside, I want to play the breakdown in this situation after a period of long, low volatility. Now, in most cases, I want to see all three lines below 25. And if you notice, there's just a lot of volatility through this period. There wasn't really a period where we had low trend strength, which is when ADX is below 25, but we also want low volatility. That's where all three lines are below 25. That's showing you that you don't have a lot of big whippy movement taking place in the price action. If we can get all three of these lines below 25, then you want to draw trend lines on price and play the breakout or the breakdown from that period. So this is how I would look at ADX and really simplify it for yourself. Look for periods where the ADX is above 25 and then play the pullbacks or rallies using the smaller time frame for triggers. I've done a lot of videos, and my whole book and course is devoted to teaching you how to play these rallies in this case or pullbacks in this case. All right. So hopefully this helps a little bit and simplifies ADX for you somewhat, especially if you're looking to play it for trends. Let's go ahead and get into the stocks now. Just briefly, my services can be found at rabilstockresearch.com. If you go to the services page, the individual package, if you do the individual package, you get access to my trading course automatically. You can also buy the course individually for $100 a year. So if you want to check that out, go to rabilstockresearch.com. Let's go ahead and get into the individual stocks and look at some of the requests that came through. Okay, so I've got my 4 charts up, and I'm going to start out with the TNX, but first let me just say I get a few questions on this each week, and I get new people watching the show. So I've got the monthly chart in the bottom left with an 18 and a 40 standard MACD with exponential moving averages, and then I use an ADX with a 13 DI reading and an 8 ADX reading. And I do that for all 3 time frames: monthly, weekly in the bottom right, and daily in the upper right. In the upper left, I have the same weekly chart with the zigzag. I use the 18-week, and then I overlay a 72-week, which is basically the 18-month line. It corresponds very closely to that. And then I've got the relative strength in black with a 30-week moving average. And I've got RSI overlaid in 2 different versions, a 20 RSI and a 5, gray and red. Okay, so let's start with the TNX, and I like to start with the bigger picture. And we've made this substantial move to the upside and made it all the way up to 4% here. And you can see this big breakout at 3. This is going to provide a pretty big cushion of support underneath if rates decide they want to keep pulling back. So I'm not looking for rates to fall apart here, okay? But they could continue to consolidate between now and then the new year. I think, I think we could get a little rally. We've gotten a little oversold. You can see this pretty big move on the daily chart. We look like we're due for some kind of a bounce. You see the MACD has gotten a little away from the 0 line. And we've made a pretty substantial drop off the peak. So we're probably getting pretty close. I'm just kind of eyeballing it. It looks like we're right around the 50% retracement. And that's kind of a good thing to keep an eye on as well. I think if we break that to any substantial degree, then that really hurts the momentum of this trend. If you go back and look, this pullback held well above the 50% level, and then we had this rally and this pullback that held well above the 50% level. We want to keep an eye on that because for each leg, it gives you an idea of how much momentum you have. But what I'd say is we still have rising 18 and 40 week. They're moving up at about the same rate. I mean, this is a pretty strong trend, and we've got the opposing trend going on the daily. We are due for some kind of a bounce. The problem is because this was such a sharp drop, look at what the MACD has done. It's clearly rolled through its signal line. I would only be looking for some kind of a retracement here and then more consolidation. And it could play out as an ABC decline, which allows the monthly chart to come in a little bit closer. It's gotten really far away from the 18-month and pretty far away from the breakout level. So that's kind of what I'm expecting here. More consolidation, maybe a short-term rally, and then more of the same consolidation sideways, that kind of thing. All right, I got several requests regarding some metals. So I'm going to go through gold and I'm going to go through gold miners just to show the difference. So we've got this monthly chart, which had this massive breakout. And you always want to look at it from a bird's eye view first. Look at what's really going on in the bigger picture. Massive breakout that makes this huge move to the upside. Really good strength behind it. And then it goes through this consolidation pattern and then goes up and tries to test that high and fails. Now look at what's going on here. You see these monthly charts with these massive tails? I mean, there's just huge resistance up there. Now, when we did that, we went up, pulled back, and really made a lower high and now have made a lower low. So we've kind of formed an ABC corrective pattern on the long-term chart, the monthly chart. Look at what MACD did. It was way overbought in 2020, and it's worked all the way back to the 0 line finally after all this time. Now, it looks to me like we've got really strong support at 150 here for GLD, but we're rallying up to a declining 18-month line. Now, when I look at this in relationship to the MACD and the fact that red DI did not get above 25 during this consolidation, I'm more inclined to believe that this is going to break through the 18-month and form, it's probably more of a range-bound pattern, but it maybe has a little bit more upside. We got pretty good strength off the weekly chart low. We got, that's a pretty good move off this bottom, and we did resurface through this breakdown level here. So I think there's some encouraging signs. We've got a little bit of sign of momentum here. All good things, but we've got some problems, I would think, somewhere around 170, where we're going to need to get through that to show that we're really kind of turning the corner and we want to work our way up a little bit higher. But this really isn't in a position to trend yet. I think it's going to need more time. Whenever I'm fighting a declining 18-month, I think I know I have time. I don't have to be in a big rush to go crazy with these. Now, if we look at the GDX, which is the miners as opposed to the gold, look at what happened here. You see how this broke support? So look at that MACD. You see how it's well below the zero line? It went through the same correction, but instead of holding the zero line, this is broken. So it doesn't have a lot of strength in the decline, but this is a much weaker corrective pattern. And I think it's going to have more resistance here, probably starting right about here. Even if it pushes through, I just have a hard time seeing this get going really quickly just based on the way it's taken place. And also, MACD has already worked its way back up to the zero line on the weekly chart. This had a lot more strength on the sell side here. Yeah, I mean, have we made a low? I think we have, but it just doesn't look all that appealing to me as something I'd want to play right now. Now, if this pulls back towards the 18 here, like this, and especially if we can push through a little bit more through the 30 area and then come back through here, and we get a pullback towards the 18-week, which is rising, and we don't show any real selling strength in MACD, in ADX or MACD for that matter, then you could consider playing an opposing trend pattern where this is going to come down. MACD is probably going to come down towards zero for a trade. But I would view it only as a trade only at this point. Now, I did get a question about the GDXJ. It's actually just a slightly weaker version of the GDX. So I didn't want to repeat myself. It's basically the same pattern, only a little bit weaker. Okay, let's look at silver. Silver is very similar to what I was just describing. You see how this couldn't hold this breakout area, but look at the difference. So we have overrun here, but look at the difference in the rally. This is already a better rally than what we're seeing in the gold miners. This looks a little bit more like the gold chart, but not quite as strong because there was overrun on the long-term chart. So what I'm saying here is the rally is comparable to what we saw in gold, but this is probably going to have a little bit more resistance. It's another one where we got to see how this pulls back and see, how it handles that. But nothing here in any of these so far really appeals to me as something that I want to get aggressive in very quickly. Even on a pullback, I would view it more as trading plays until we get a little bit more evidence of an 18-month that's cupping around. So let's look at uranium. So this is a little bit different. See, this has gotten quiet. This had a decline and has gone sideways here. We can see that with this overlapping price action just going sideways on this price chart. So I'm sort of thinking if I can get a breakout to the upside, this might appeal to me a little bit more, but we've got to get back up through, this area up in here. So it's going to take a little bit of work, but it's clearly a low ADX condition. All three lines are pretty low, so this is kind of a low ADX and low volatility condition. If we can come up through 3, it's going to start to pique my interest. Probably need to get through about 3.25 to really break out. Okay, if we look at DVN, this is a pretty good representation of what's taking place in energy. So I was looking at energy as this was pulling back to the rising 18-week after showing a lot of strength. MACD was kind of cupping around. Look at the correction and how sellers could not take over at all during the corrective pattern. So I was willing to watch this, but if you notice the way this played out, the daily chart never has given us a signal. And we have serious overrun in MACD overrunning the zero line. So when that happens, I know I don't have to be in a hurry. I'm not going to play it like a downtrend line break. I need more evidence of a turn now. This was too extensive of a pullback, so we got to be a little bit more careful here. We do have risk to the 18-month line. I'm not saying we're going to do that, but we're below the 18-week right now, so we got to be a little bit more careful with this. Now, if it turns on a dime here and shows some strength, we can play the higher low as that develops, but this needs to get going in a hurry if that's going to happen. Let's look at Apple, because this is at a pretty critical area, I think. If this doesn't hold this 135 area of support, I would be very concerned about what's going on here. I'm concerned already, and my main reason for that is look at the relative strength. So I can draw a trend line on relative strength. And this is a really powerful tool for the big cap stocks, something you definitely want to be doing. Notice how this is breaking. If you go back and look at Amazon and Google and Microsoft and look at where they broke theirs, it ended up getting a lot worse, but we're coming into this key area. If we have to break, price and relative strength need to agree. So we need to see this break down. We're getting kind of an anticipatory signal in relative strength, so that makes me weary, a little leery here. But we're going to need to see the breakdown to get confirmation. Okay, so look at Rio. This actually came down and undercut this bottom and then got a really strong move off the low. This is one I would probably look to consider on a pullback based on the strength of this rally. I'd like to see a little bit better green DI. If green DI could actually break out above all this noise here and make a new high, that would sort of confirm, and then we could look to play a pullback towards the 18-week. There's a lot of resistance up here in the mid-70s, so I wouldn't chase this right now. I did get some requests for some Indian stocks on the Indian exchange, which I think we can learn a lot from if we look at. I worked with money managers that have emerging markets, and I can tell you that these Indian stocks follow what I do to a T. Look at this huge move on the monthly chart, and then we came back in a really quiet manner and held the 18-month line. Look at the strength of the ADX here, and then we have low ADX pattern here, and then look at this breakout. I mean, really beautiful breakout after a double bottom MACD at the 0 line. You definitely wanted to take that trend line break. A lot of power behind this move. So definitely a really good pattern. Right now it's tough to buy because it's made such a big move. You want to look for a pullback. So this is consolidating sideways. It's clear to me that we need to take out this prior peak in this pattern, I think, to get things going. We need to see this breakout through 150. We had overrun in MACD. So we're going through one of these phases. So when I see that, I want to see this come back up through the 150 level. Look at this one. So this is a consolidation on a monthly chart of a powerful move to the upside, but we have overrun here. So when I see overrun, I'm thinking be a little bit more patient. You could argue that you have a 0 line reversal with a low ADX. It's actually a really strong ADX, but I don't want to do that. There's a little bit of overrun in the MACD weekly, and I want to see this move and do one of these deals because of what's happening on the monthly MACD. So a really good name to watch. I think the 800 number is a level to key on. If we can get back up through 800, you definitely want to put an alarm there just so you see it when it happens. Okay, URI, look at what's going on here. So this is one that I want to talk about because look at how this is making a higher bottom. And if you look at the same period for the market, the June low, and then we rallied up and we made a lower low here, right? So I didn't really draw that correctly. We came down on the market, moved up and made a lower low while this was making a higher low. You see that? This is the kind of stock we want to be on the lookout for. Now, if the market decides it wants to make another drop here, we want to watch this and see if it can make another higher low. These are the stocks that are going to be the leaders of the next bull market move, even if it's just a move over the next 3 to 6 months. You want to be looking for stocks like this. This is really important. Any stock that's going to hold the 18-month on a pullback with improving MACD and improving ADX, we want to keep an eye on right now. That's basically the list that I send out each week. In each sector, I go through about 3,000 stocks total, and I'm looking for the ones that are holding up, and we want to look for stocks that are resilient right now. Look at ARK. This is anything but resilient. And the problem I've got with this is now it's gone quiet. Do you see how there's not a lot of activity here? Once we see that and the size of the bars drop, we know that we're going to look at a bell-shaped curve. This has got to go through a full sideways basing pattern. This is not going to V-bottom anymore. You can't do that. You can't V off of this pattern, I don't think. The odds of that happening are really small. I think we got to look for a consolidation that goes sideways for an extended period of time. Look at the difference here, though. You see how it never went quiet, and now we've broken the downtrend line. In fact, you could be a little bit more aggressive and say we broke that trend and then we undercut this low and we turned up. But I would be a little bit safer and say this is the trend line break and now we're trying to form a 2, some kind of a consolidation here. We're still below a declining 18-month, but this is the kind of improvement. This price action has me kind of intrigued. They're still interested here. Look at the improvement here. All right. Thanks for watching today. My contact information as well as the website is listed. If you have a stock request or two you want to send over, use stocktalk@stockcharts.com. Have a great week and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.